Hello, everyone. Hope everyone had a great trading day today, Tuesday. I'm doing a recap of today's trading, which was once again fantastic. It was easy. Um, it's just a very easy day to trade using the LRC strategy. It never ceases to amaze me just the ease of using this and how successful I have been with it. I hope that anyone that is trying this and all the people that are in our Discord, they're also happy. I know that many are, and I hope that anyone that doesn't or isn't will reach out so I can, see what's going on and help them figure out what they're doing wrong because it's truly a simple, easy strategy to follow. It has a great risk to reward. If it doesn't work out, you take a small loss, you move on, but most of the time it works out and you end up with really great profits. So I'll go over today's trades. Once again, I'll go over the strategy to a degree, show a little bit of how we used it today, and I'll try to make it really short. Some of my other videos have been a little bit on the long side, so I'm going to try to shorten this one up and just go over it quickly. So first trade of the day was a banger right out of the gates. Tesla. I got into a couple. I got into Tesla, got into Apple. I actually had a loss on Apple, but that was all my fault. Poor management. I just let it go, and then when it got to a point where it was really down, I decided to just go ahead and cut it, which in hindsight, I shouldn't have cut it. I should have stayed with the trade and waited through the drawdown because Apple had a certain level that I needed it to get below. Anyway, I'll show that to you. And so anyway, let's kick it off. This is Tesla. So first trade of the day, like I said, was absolutely just beautiful. And if you haven't seen my videos before, we trade the Anchored LRC, which are these channel lines. It's the linear regression channel, but it's anchored at specific points that make it absolutely amazing. Now, granted, Tesla didn't even come back and get near it today, so it wasn't much of an impact for Tesla, with the exception of knowing when it broke over it, which is when we take our trades. So the way we take our trades, I do trade the 20 EMA and the 200 EMA. You can use the SMA if you like. I prefer the EMA with this strategy. And some of the other guys in the group, I think they trade the SMAs. Some use some others, but as long as you're getting what you want from the moving averages, that's really all you need. Um, and what this one does for me, the 20 EMA on a 2 minute, also that's very important. I trade the 2 minute time frame. That's when I take my trades. That's how I look for all of the action and the price action to take place, and that's what gives me the confidence to trade this strategy for the most part. I do look at other time frames on other charts just to kind of get a broader view of what's going on with the stock. 5 minute, 15 minute, hour. Typically 5 and 15, and I do also have a 10 minute chart that I watch occasionally. So today was just absolutely beautiful. We waited, gave it a little bit of time for the market to shake out a couple candles in 2, 4, 6 minutes or so. So we saw Tesla come down, came down to this LRC level and closed below the 200. So then we're looking for, okay, are we going to get a breakout to the downside? And I didn't take anything here yet because it was just too early. And also I was watching the market. The market was not, I think the market was actually going down also. But then I saw on this candle, Tesla kind of came up, closed at the 200. I gave it more time. This candle, of course, came down, wick down close to the LRC. Both times you can see the LRC just kind of almost stopped right on it, pushed back up. Then we get our push back over the 20, and that's when I took my trade right here on this candle right here is where I took my trade. So the way I typically trade, I trade two different ways. Typically, I will take breakouts, which is literally moving right over the level I want. And if that comes back into this level, I don't even wait for a close. If it comes back into this level, I just get out because I assume it didn't work out, and that's okay. Sometimes it comes in, I get out of the trade, I take a small loss, and it still goes up. I don't care. I just don't want to get the big candle that goes down and really impacts my risk. So that's how I trade breakouts, and I also trade the my conservative trade is a close over the LRC, which is here, and then I take the first move if it's green above the close. I don't really wait for the high. You can wait for the high if you like. That's a little bit more conservative. I think that helps your probability of a continuation in some cases, but I want to go ahead and get in. And then the reason for that is sometimes, especially if we have moved over the yellow LRC, you'll get a retest. And when we get that retest, after I've already added in right here, I will add in again right at the LRC on the retest, which allows me to, of course, average in a little better if I, depending on the height of this candle when I got in or how far this candle closed over the LRC. Sometimes, the candle might be up here. And then I'm taking the next one. Well, my risk is a little bit more from here to here, right? But then once I get in this one, if I get a pullback, and I start seeing buying pressure that looks something like this candle coming off of this line, then I actually will buy right back in. I'll put more onto the trade and get this. And so I traded this all the way up to the 203. I scaled out. I took all profit but 2 at this point. I actually ended up taking I took 1 here. I'm sorry, I scaled out all but 2, and then I held the 2 to here. I took 1 more off, so then I let a runner go, and I don't exactly know where I ended up, but I did get way up here somewhere and decided to go ahead and take my last profit. It was actually really good. I think it was right at this candle. So anyway, I got all of this push all the way up. It was almost a $700 trade. Really great trade. My only issue is I didn't get in heavy. I actually went in light. So I went in light. I think I had 4 contracts. Ended up with a $700 profit on this trade. Beautiful, easy, easy, easy trade. You could have, actually, the way I trade the strategy is I use the 200. Very important. If you get really extended, like say this is pretty extended from the 200, from the 20, right? So if you start seeing a pullback, I get out on the second red now, okay? And the reason for that is I want to take my profit high as I can. Sometimes it's the first red. It just depends on how far down it comes, right? So I want to lock in as much profit as possible. And then what I'll do is I'll wait for the pullback to the 20 and then add back in when I get to push back up. This one wasn't a great add back in. I probably wouldn't have here because it didn't get close enough to the 20, but this one was. So let's just say I got out here. I would have held this and waited for a pullback to the 20. Now this one, it doesn't have to come all the way to the 20, but I don't like when it's this far away, honestly. I don't feel like I'm going to get the good move, which I didn't on this. But this consolidated, got this candle here. I would have taken this candle above this candle right here, clearing this consolidation. And then I would have bought back in and got there. I didn't do that on this because I got into another trade, but that's how you trade the 20. So 2 ways to trade the 20. If price is close to the 20, you scale out, still holding some, you wait for the pullback, you get a candle like this, you add back in, you ride it back up. That's how you trade it. And until it breaks. Now my rule, you can have your own rules, of course, But my rule is on an uptrend, I wanted to see two consecutive red candles, and then I exit the strategy. However, there is a slight, um, I guess, alteration to that, or an exception. That's the word, right? So let's just say this is my red candle. I get my first red. Well, let's just say I get a wick, but then it closes right here. I'm not going to get out on that candle because it closed right here, because it's either right in line or right next to it. The next candle, if it comes and starts going below this candle, then I'll get out. I've already risked this candle, right? So, because a lot of times what I've noticed is every now and then you'll get a red candle, a red close, and then a red close that's either above that close or right in line with that close, and then you get a green that just goes straight back up. So I will give it that risk if my closes are pretty much equal, if that makes sense. If I get a close here like this, and then my next close is down like that, no, I'm out. I get out. So, and then I just move on. And if it does come back up, oh well. I just take my profit and move on and look for the next setup, or call it a day, depending on how much. If I had got in this with the amount of contracts that I normally do, this would have been a massive trade. I wouldn't have had to, I didn't have to make any other trades today. 600, almost $700 trade is more than enough for me. Excuse me. And honestly, if you think about it, I was $700 in 2, 4, 6, 8, 10, 12, 16, 18, say 20 minutes. So say 20, 25 minutes. You made $700, you move on. So excellent strategy, easy to follow, easy to trade. My second, oh, I got into Apple also, and Apple was not the greatest. I didn't manage it well, and what I did was stupid, honestly. So here's what I did, and we're all human. I know what I'm supposed to do, but I guess I saw the loss, and I didn't want to risk much more, and so I got out. And I got out at the wrong time. You'll see, it was absolutely idiotic. So Apple was just going straight up, and I ended up taking the trade, or this trade right here, this candle. I believe it was that one. It may have been the next one. So I got in Apple, and what I got in Apple, I didn't get in very heavy, but I got in heavy enough that when it came up here, I did not take anything off. I was watching my other Tesla trade, and I had this one up on my, over on the side, but as it was coming down, I was like, oh crap, I'm starting to, get into a loss. So I was like, no big deal. I'm still where I need to be. It came all the way to here, and I decided to exit because I didn't want to. It was like $300, so I did not want to get risk anymore. It was really stupid of me to get out. Absolute dumb mistake. I FOMO'd, right? That's what we do sometimes. 220 was my level. It already blasted through the LRC like it didn't even matter on this one. Just straight through, right through this 220 this morning. And all I needed to do was hold into drawdown. I think I lost the max because I got out as it was coming down. I just thought it was going to keep going. Of course, it wicks right back up off the 220, comes over to retest the 20 EMA, boom, goes up, comes back, retest the 20, doesn't close consecutive 2 times. This would have been your exit, which is way down here, but I actually I wouldn't have got out I would have got out right here, actually, as this candle was going down. But in any event, I wouldn't have ended with a loss. I would have ended with a profit on this if I just didn't FOMO out. Um, Apple looked good during the day, but it only looked good if you got it here. In reality, it really didn't go anywhere today. We did talk about it a lot, and that's the interesting thing. Like when you're laser focused on movement at that moment, it sometimes seems like a lot more, right? You're looking at it and you're like, oh my gosh, it's moving. I think I said that several times today, right? But when you zoom out and you look at the overall picture, well, how much did it really move? Not much at all, right? I mean, now not counting this, but I'm talking about this consolidation area. I mean, that's not much. That's not much real movement. It was just a chop most of the day, honestly. So in reality, you could have scalped some, but holding this all day with an option, you would have lost. You probably would have lost over here if you'd held it. You'd have to guess or get out here. You wouldn't know really when to get out because you never hit any upper levels that I had marked. My next upper level was 225. Um, so interesting. I did get into a swing trade that worked out pretty well for me. I didn't hold it long enough either. I think my that's just the way I'm doing it these days, I guess. Um, that may change soon, but I did get out right here. And the reason I got out here is this was my upper LRC. This is what I call the long LRC. And if you're not familiar with that, I do have a video on the long LRC. You can go look that up. But I draw them in manually over either several weeks, months, whatever it takes to get a good level and show the trends. And when I approach these big levels like this, I get out because a lot of times this is the pivot back down on the bigger trend. This went right through, which was amazing. My target for my swing was 172. I ended up getting out here. It was a good win. It was a swing trade. So the first winning swing trade that I've had in a very long time. So I'm happy about that. Very low percentage. I think I was $89. Where is it? Did I have it in here? Yeah, it was only $89. But you know what? Oh, and that wasn't almost 700. It was $630 was my Tesla trade. So these are all my trades today. This was my Apple loss. That one was dumb. Um, and then I did get in a Boeing trade that didn't go anywhere, but I got out at a good time. I'll show you that. And I'm going to show you the big miss of the day, which was SMCI. We were really crying about it in the Discord in the community, because it could have just been amazing. So Boeing, I got in Boeing literally on this candle as it crossed over the yellow LRC. I just caught it on the way down. I only got into a couple, and as it started coming back up on this green candle towards the 163, I did take one I scaled one off here, and I ended up just getting out right at this line for 114 bucks. But I actually thought that I was going to get a retest of the 163.40 and then a push down. It didn't do that. So that's why I went ahead and exited. I was waiting for a retest and I was going to re-enter. But so I got a little bit out of it. Not a whole lot. And then I did some little SPX scalps, which are not really much for uh, showing, honestly. The TSM trade, I'll show that. I bought it I bought it on Monday. No, I bought it on Friday, sorry, Friday of last week. And so I bought it. Here's Friday. Um, and I bought it because it was above the 164.50, and I bought it as it was pushing up right in this area, I think. I was like, you know what? It's above this. I'm going to take a swing trade because I think this thing's going to continue. And um, Monday, it looked decent. It came back down. I decided to hold till today. And like I said, it was only $89. But it did work out and it did get to my price target. And I did only buy one. I only had one contract. So it was my max. So my percentage was actually not bad because my max loss was 260 bucks. So did pretty good on it overall, but I didn't get into it heavy because I'm just trying to get my confidence up for swing trading. As for the LRC strategy, guys, this thing is absolutely incredible. You have to try it out. You have just I'm telling you, you get rid of all your goofy indicators, all that garbage, It's all garbage. Get rid of it. Go with price action, learn price action, understand price action and levels. And this is an indicator, but it's just levels. It's not like an indicator that says, okay, this is happening, XYZ is happening, so now get in, because then XYZ could then stop happening, and then you end up with a loss over and over, and rinse and repeat, and you end up blowing up an account over a long period of time. I think that's what 90% of traders do, and they look for that holy grail. There is no holy grail, with the exception of this one. This is a holy grail for me. Um, do I take losses? Yeah, I do. Probably mainly for dumb trades, but the risk to reward is how you do it. It's risk management, it's key entries and key exits. That's it. And it's simple. It's easy to follow. Um, if you're not doing well, it's just you're not taking good entries. You're probably chasing runners. You're not getting in at the levels. And sometimes you are going to take losses though. So you have to be prepared. And if it's stressing you out, then you're over leveraged. You're risking too much. Risk less. You'll be more calm with it. If you're in a trade and you're down say $200-300, and you're like, oh my gosh, that's too much for you to lose at that moment. So you have to come to grips with that yourself. You need to understand that you need to be calm. You need to be collected. You need to have resolve. You need to be like, okay, I'm taking the trade. If the trade doesn't work, I just exit the trade. I'll take my loss and I'll look for a new setup and move on. No big deal. But if you're risking so much that you're stressed and you're just really frustrated and mad that you did it, because I think we've all been there, then you're just over leveraging. I just would say take a moment to reflect upon that and change how much you're risking. If the stocks you're trading cost too much, then go to like trade Qs, trade TQQ, um, T 3Qs. Trade that. The price is very cheap. You can get in, you can scale out, and if your trade ends up not working out, at least it's a manageable loss. It's not going to blow up your account. So I urge you to really focus on that. That's the most important focus, risk to reward. What makes the LRC so good is its risk to reward in that where you get in and out. There's only I would say that it's not really a negative, but there is only one aspect to it that I realize may not be as may not gel with some traders, and that's I do trade with another community, and we trade break and retest of major levels. So these levels are the levels I put in every single day. I put them in our Discord for all of the community, the members of the community, the traders in our community. We have traders and then we have non-members. The traders, they have access to all of the we have I put in trading charts every morning. I put in levels every morning so everybody can get their charts ready and prepared for the market to start. And these levels are extremely important. We trade to and from them. And my point about the levels is sometimes when you're taking the LRC strategy, like what you would do here, you'd get in here and this one would be, would it be choppy? But you would stay in this because you would stay above your 200, your 20 right here. There'd be no reason to get out, and just a lot of chop, right? So a rough start in the morning, but you just keep trading it to the 20. And right here would be your legitimate first exit if you traded this all the way up. You have two closes below, you get out. You could have got out here and then re-entered here and then rode it the rest of the way out. But just pay attention to how the LRC is so very important. And you're going to see something else that's kind of interesting here. I told you I have the long LRC, right? Well, I have the long LRC on every one of my charts now and all the stocks that I trade because it's so important. And like I said before, if you haven't, use the long LRC, you can go look at my video. Hopefully I did a good enough job to explain how to use it and how to set it up for you. But check this out. So, oops, just gonna blink. Okay, look at the LRC right here. Boom. Where did it stop? The LRC. Where did it consolidate? Right to this LRC. Where did it go to the next LRC? I call it wicking. It's wicking off, wicking off, wicking off, wicking off. Goes pushes up. What's its resistance? This LRC. Breaks above this one finally. And what does it consolidate up against? This LRC. Finally it breaks this consolidation. It has a little hiccup here on this LRC. Usually the yellow on mine, that's the 2 deviation. That's the one I take most all of my profit on, because a lot of times it acts more like a support resistance, like it did here. Boom, shoots it right back up. So it acts like a big level. That's how I trade to the level. So say I'm in a trade right here and I get to this level right here, I get all out. I exit my entire strategy. Why? I don't care if this goes past it, because a lot of times it goes past. Most of the time you're going to go past a big level. Once it gets through a big level, it's going to come back to it, because you're going to get past it, and then all the people that got past it and up here, they're going to start taking profit, and then that profit taking pushes it back down, and then once all the profit taking stops, it's basically the pullback or the quote unquote retest. Buyers step in and boom, they blast it back up. Well, guess what I do? I buy in here. So I put away all of this. I lock away that profit. I then don't have to worry about, wow, that was a lot of lines. I don't have to worry about if this thing gets here and goes right back down and takes away, reduces my profits, right? So I lock in my profits. I wait for a retest and I re-enter. If I don't get a retest and it keeps going, guess what? Oh well. That's the way I look at it. Oh well. I missed the move. I get frustrated. I talk about it in my Discord. We all fuss about it. We're human. We're gonna do that. But at the end of the day, I locked in profit, and I'm happy, and I move on. But check out what happened on. This is what I call my long. I usually label it as L-LRC on all my charts in my Discord. Look what it did here. It consolidated down with it. Got above it, came back to it, boom, right off of my long LRC. Pretty incredible. Like this, it's a big deal. It really matters. So I did take supposed to be a short video and made it long once again. But anyhow, I really hope you guys enjoy the video. I hope that this helps you to kind of understand and see how to trade the strategy. If you're interested in this strategy, please come into the Discord. You can join. I guess I have a free version. I do have to vet everyone that comes in. So when you come in, you have to go through the WAP free membership thing. And the reason for that is we just have so many scammers. It's just stupid, ridiculous. So I will also say this on this video, and I'll try to remember to say it on all the videos. I will never friend request you. I will never DM you for anything. I'm not going to ever DM you or send you out anything that I'm selling. I don't sell courses, classes. I don't sell Bitcoin. I don't give private courses. I do that stuff for free. So if somebody's trying to charge you, I don't do that. If you need help and want me to help you, just come into my Discord, tell me. I will start a live session and walk you through step by step. That is not a problem. I do that almost every day, probably like 3 to 4 times a week. So I just want everyone to know that, because there's just a lot of scumbags out there that it's kind of a sad thing in our society, but it is what it is. We have to deal with it. Just know that I'm not going to send you anything or try to sell you anything. And with that said, please hit the like and I hope if you liked it, press that like button for me. Get that word out so we can get more people making money on this strategy, and subscribe, and so you can see the next videos that I put out. I will try to put out some, maybe a little bit better, more entertaining. I'm kind of new at this, so bear with me. I will also, I'll have my link in description to my Discord down below. So you guys have a great evening, and I hope to see you in the Discord, and I will see you on the next video. You guys have a wonderful day.